Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Jason Metz, insurance analyst at Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss who gets hit hardest by new FEMA insurance rates. Jason, it's great to see you as always. Welcome back to Trade Talks.
Thank you. It's good to see you too.
How does flood insurance work, and how do you know if you need it?
Yeah, so I'll start off by saying that a standard home insurance policy, renter's insurance policy, condo insurance does not cover flood-related damage. So if you want coverage for floods, you need to get a separate flood insurance policy. And flood insurance can kind of be separated into two coverage types, building and content. Building obviously covers your building, but also other things like your electrical system, your plumbing, things of that nature. Contents would be your furniture, your clothing, your rugs, all those kind of things. You can typically buy just the building coverage or contents coverage or both. In terms of who needs it, FEMA has a stat that 99% of counties in the United States were impacted by floods between the years 1996 and 2019. So unless you live in that 1% of counties in the United States that weren't impacted by floods, chances are your home has some risk. Now, if you live in an area like the Atlantic coast that's hurricane prone, your home has a much higher risk. But flood insurance isn't just for people that need to worry about hurricanes. You also need to consider severe weather that causes flash floods. So the long of it, or the short of it is, any homeowner that has some flood risk should take a serious look at getting flood insurance.
Yeah, we saw that happen in New Jersey where we live with Hurricane Ida, and places that flooded, we didn't even think it was possible. So I can understand what you're saying there. So Jason, where do most people buy flood insurance through? And is it relatively expensive to other homeowner insurance policies?
So the majority of folks get their flood insurance through the National Flood Insurance Program, which is managed by FEMA. I think they manage a little over 5 million active policies today. To get that, you need to live in what's called an NFIP participating community. And I think there's something like 22,000 communities that have NFIP insurance. If you aren't in that area, if you're not eligible to buy a policy through FEMA, you can get private insurance. That's typically an option.
And is it relatively expensive to, let's say, homeowners insurance or other types of insurance policies one may have?
The average cost prior to this methodology change that we're about to talk about through FEMA was about $700 per year. Now, if your home in the previous pricing methodology was in areas that were determining higher risk, you paid more. So, it really depends. We could talk about that, how the new pricing should affect your personal property.
Okay, yeah, let's get into that. This way we can contextualize that a bit. Why are flood insurance rates changing, and where will the biggest impact be felt?
So FEMA was introduced, the flood insurance program was introduced in 1968. Their methodology has not changed in like 40 plus years, right? They relied on what were called flood insurance rate maps that created flood zones. And these flood zones determined if you were a high or a moderate risk where your home was. If you were in a higher risk flood zone, then you paid more, obviously, than somebody in a lower risk flood zone. Now, as we've been seeing these massive storms in recent years, the amount of claims by far outweighed what they were taking in premiums. And this led to massive, massive debt on FEMA's end. The last number we saw as of August 2020 is FEMA is something like $20.5 billion in debt through the flood insurance program. And that's after Congress canceled about $16 billion of debt in 2017. So to address these inaccurate prices and massive debt, they're introducing, or have introduced now, what's called risk rating 2.0. And this gets rid of the flood zones, and it now focuses on an individual property's risk. And that takes factors like your home, foundation, if your home's elevated, replacement cost, the frequency of floods in your area, and distance to water. So the intention of risk rating 2.0 is to have what FEMA is calling the most accurate flood rates ever. This is going to change people's pricing. Now, there are some people some homeowners that are going to see some significant increases, and maybe in places you wouldn't expect. For example, folks in Lawrence County, Ohio, are going to see about an increase of about $80 or more per month. Homeowners in cities like Anna Maria, Florida, Captiva, and Boca Grande are also going to see a percentage of those homeowners are going to see increases of around $80 a month. Conversely, some people are going to see pretty big decreases. 100% of homeowners in Lake Preston, South Dakota are going to see their flood insurance bills decrease by $80 a month. Homeowners in Bronx and Harlem, New York are going to see about 70% of homeowners are going to see their bills decrease by $80 a month. New Englanders who live in Connecticut, Rhode Island, and Massachusetts, about 15 to 17% of those homeowners are going to see decreases of about $100 a month. Those are some of the more drastic changes.
Mm-hmm.
Overall, most of the changes are going to be relatively small. For example, 82% of homeowners in Florida are going to see increases of about $20 a month. You said you live in New Jersey, or you guys in New Jersey. About 75% of New Jersey homeowners are going to see increases of $20 or less per month.
Right. Well, no surprise after we just went through, like I said, with Hurricane Ida, but it doesn't seem, on a relative basis. And of course, everyone's income situation is different, but for the massive damage that was caused, it seems worth it, in my opinion. But is there any way to save on flood insurance? Can you compare rates or anything like that?
Yeah, so you don't have to buy flood insurance through FEMA. So that's a great point, that you can compare quotes. FEMA is the method that most people buy their flood insurance, but more and more private insurers are entering the market. A decade ago, there wasn't very many people in private companies insuring floods, but now that's changing. So I would encourage homeowners to compare prices between FEMA and a private flood insurance company. If you do get a flood policy through FEMA, they do offer some discounts. For example, they offer mitigation discounts. And one of those is moving machinery and equipment above your first floor. And that would include things like your central air conditioning, washers and dryers, food freezers, furnaces. If your home is elevated, you can get what's called an elevation certificate. And if you have that, and it's determined that the first floor height of your home is higher than the first floor height determined by FEMA, you could be eligible for a discount in that respect. And then one final way that you could save money on your flood insurance is to choose higher deductibles. Now you have a deductible for both your contents coverage and your buildings coverage, and the deductibles range between about $1,000 and $10,000. The higher deductible that you choose, the less you'll pay in premium. So if you choose a $10,000 deductible, I think you can get up to about a 40% break on your premium. The thing to keep in mind, though, is obviously the deductible is what is deducted from the insurance check. Mm-hmm. So if you have $50,000 of property damage and you have a $10,000 deductible, you're going to get a $40,000 insurance check. So you need to keep that in mind.
All right, Jason, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.